Good afternoon, everyone. Welcome to yet another session hosted by Lead Square. Today's topic of discussion is Day Zero Advantage, fixing the early gaps that hurt prospects the most. I would like to now introduce our esteemed panelists for today's session. First up, we have Mr. Krishna Swamy. He's the CTO at Aptus Value Housing Finance, a seasoned technology leader with a career spanning more than 2 decades. He has managed global technical support and product development, built communication, and tracked systems used worldwide. He brings deep expertise across ERP modules, functional workflows, and end to end product architecture. Next up, we have Vidya. She's the CIO at Dwara KGFS. With over 2 decades of experience across technology, product, and operations leadership roles. A true pioneer, she has led product strategy at Integra, large scale operations at eBix, and previously held senior roles at R Systems. Her career spans technology transformation, system rollouts, and aligning business teams around digital change. Next up, we have Mr. Girinath G. He's a dynamic leader in finance, entrepreneurship, and outsourcing with over a decade of experience transforming businesses. Founding member and director operations at DigiMoney Finance, he played a key role in securing RBI license and scaling the firm into a fintech powerhouse. He's also director at ActSource, a global outsourcing firm serving accounting and financial services businesses. Lastly, we have Mr. Utsav Motilal, Associate Director Financial Services at Lead Square. He will be moderating today's session. Thank you so much for taking our time and joining today's session. I really hope the audience finds your insights extremely helpful. And I would request our audience to feel free to drop in any questions that they have, and we'll take it up towards the end of the session. Over to you, Utsav.
Thanks, Asha, for that kind introduction. Hello, everyone on the chat. Thank you so much for joining in. It's a pleasure to be sitting and having this conversation with you all. So, as discussed, we'll be just walking each of you through a few questions to gather your inputs on the experiences that you've had throughout your comprehensive careers. Right? So, to start with, I'd like to start with Mr. Girinath, if that's okay. Girinath, sir, the
Thank you.
question that we
Thank you,
have for
Utsav.
you, yeah, it's a pleasure, sir. So, the question that we have for you, sir, is from an industry standpoint, what, in your opinion, are the two, three things that must always happen on day zero for a loan application to move smoothly in the subsequent stages?
Thank you, Utsav, and thank you, team, for organizing. Good afternoon to everyone, and good afternoon to all the attendees for taking out in for today's session. So, thanks for the intro. Coming to a question, Utsav, what are the few things that needs to be clear on the day one for a smoother journey? I think, in my perspective, clarity and completeness in the model needs to be the core principle through which you can develop a minimum viable product that can roll out to a smoother flow across your journey. So on day zero, it is going to be a bit tough, or even T plus 30, it is going to be a bit tough for you to understand where your major customer profile is going to come from. Your team would have already been working a lot on the tech part, on putting things into synchronization, into trial runs, doing test runs, and then on the sales and marketing efforts. But on T0, few tech points that I would like to highlight is capturing the right data source. Of course, it is not going to start only on day zero. It will also start at your planning stage in terms of what are the data points that you would like to capture, which are all the service providers that you would like to engage, what kind of APIs you want to expose, etc. But capturing the right set of data points, which is critical or instrumental in your decision making, will make your process and flow much smoother and much faster. That's the first point that I would like to put onto the table. Second thing is early eligibility check and doing a risk signaling. See, tech, we all agree on a higher level that tech is always going to be an enabler in the finance space. Tech cannot be seen in isolation in the finance space when it comes to our products and services. Tech can always be an enabler. So when we are talking about tech being an enabler, we can also bring in tech to signal any kind of risky applications, or highlighting to the customers on what could be their probable eligibility. If a customer is applying a loan for probably just to make easy for everyone, if a customer is applying a loan for 5 lakhs on the personal loan side, on the unsecured side, but if your product and the tech your product size is only limited to 3 lakhs and his eligibility is only 2 lakhs, then we don't have to waste a customer's time by asking him more details, and we don't have to waste his more time or his efforts or resources in completion of a e-mandate or completion of bank details, etc. Early step, and if we are able to highlight to the customer in terms of what would be his probable eligibility, that will also make your process smoother and faster. In continuation to my second point, probably having clear communication, customer communication channels would be helpful in on the day zero or probably in a month's time to have a smoother flow. This communication channel can also be utilized as a medium to get feedback as well as critical feedbacks.
Thanks, Garina. That I have to say that is quite clearly articulated. I appreciate that. Before we move on to the next question, I'd just like to open it up to the floor. Miss Vidya, Mr. Krishna, any thoughts around what Girina had to say?
Yeah, see, from a loan application perspective, if you see, basically, what actually the day zero, the day -1 and -2 actually makes more sense actually when you do that homework actually is what you need to understand the lead when you get a lead actually is how you segregate that lead based on the product of the loan which he's eligible for and his criteria of basically what kind of a loan he is looking for actually what is his requirement and what is it that he's looking for actually and what is the products which is available for us which we can be doing that so that along with the status of that along with some right procurement of right documents or right collection of KYCs or whatever data collection that is very important for the sales actually. See, basically, in the multiple loans are there, whether it's a unsecured loan or a secured loan. We need to understand whether this comes in a secured loan or an unsecured product. Actually, if it's a secured product, what are the things which needs to be taken care of, and what are the things he is eligible for, and what is it? So these are mostly built into the tech stack today in the initial stage, and these come as a ready reckoner for the sales officer or for the organic procurement actually of the lead actually organic sales so he that comes in and that this information acts as in a long way when a credit technical teams or legal teams evaluate the loan application further actually this makes them smoother a ready checklist what all the documents needs to be collected what are available and what is being submitted actually along with the right product and the fitment of the product.
Understood, Krishna. I think that quite closely aligns with what Girish had to say as well. So a very next obvious question to this would be obviously directed to you, Krishna. What, in your opinion, how do high performing teams reduce what is the status queries within the first week of this journey, in your opinion?
See, when I am part of the business management committee and all, when we sit and discuss, see what we need is to understand actually the lead time actually for a lead which we procure from multiple channels today. Today, it's most of the organizations procure from omni channels. Omni-channel lead generation is there. So when that lead,
Absolutely.
that lead comes, how it is filtered in how it is evaluated how a cold lead becomes a warm lead for the sales to go ahead and do a real this thing and how it progresses actually so this status if we can capture okay this lead is for this product with this much of it and this is the fitment for this lead actually if that along with proper dashboard along with status actually if it can the transition from lead to a login can happen smoothly, there is a lot of time to save actually. The lead to login time, if I'm not wrong, in most of the organizations are still very high. The login to sanction time, if you will be wondering, it will be only 3 days or 4 days or this thing, because credit has defined policies, has a defined way of doing things, has a business rule engines and everything. They have a ready reckoner to see whether this guy will fit for this loan, is income eligible. All these things are there. But the lead to login, why this is because this is of all because most of the NBFCs, banks, and financial institutions, it's a huge remote locations they work with actually in such a country actually. The branch will be located far away from the. See, there are, and this actually this lead to login time is very important for businesses as it is becoming competitive today. 10 years, 15 years before, there was few housing finance companies. Today, there are some 85 housing finance companies. If the lead to login time and the credit needs of the customer is not addressed within the prescribed time, I don't think the customer is going to move on to the next competitor basically today. Today, that is the scenario. It is very much needed. And the government has helped a lot with a lot of APIs being integrated and all that stuff. This makes it very interesting for us to have the right data and ensure that we move in the right place actually. The need to login time needs to be tracked and also should be reduced with proper statuses, with proper visibility to all the stakeholders available actually.
Understood, Krishna. I think to quickly summarize, you also mentioned the first 2 points, similar to what Girinath had called out. Number one is clearly calling out the source of the lead, where this lead has come in from. Number two being the exact product-based requirement that that particular lead has. Number three being eligibility on an overall standpoint. And a key piece from this is how can we ensure that the lead to login time is being reduced to ensure that the customer is successfully onboarded. Right?
Yes.
Okay, perfect. As a part of the next question, Vidya, I'll raise this to you. Uh, Seeing as how AI has taken the industry by storm currently, in your opinion, where can AI realistically reduce the document-related friction that comes into the picture? Something like an incorrect submission or re-requests without weakening the compliance discipline that our regulators have put on such products and services.
Okay. So, good afternoon, everyone. I think that's a very good question, Praveen. I seriously look at AI as a compliance accelerator, right? Not as a compliance bypass. That's how I see this as. See, as from a pure start point, okay, already both Rinath and Krishna mentioned about the early stage document ingestion. Those are all a few things that we'll have to do right in the start, right? Early KYC checks and things like that. And these actually can be made smarter with AI. So the first thing, for example, is that you could have a smarter KYCs that can be done, right? OCR based, AI led, KYCs that can be done, eKYCs and all of that. Okay, so that's something that is that typically where it actually helps you being more accurate and it helps you move ahead faster. Automated cross verifications can also be brought in. For example, you will typically accept maybe a voter ID. I mean, in the segment that we work in, voter ID is one of the important documents that we get, right? And also a PAN card, you want to cross verify whether, the information is correct across. I mean, maybe between a salary slip against this, those kind of checks can also be enabled through AI. That's another kind of typical area that is, that's where it is used. I'm talking more about the early stage, right? Of course, in terms of bringing in. And a guided support for documents upload, okay? In most of the cases, if you upfront tell them that, the uploaded document is not good enough, or you need to upload both the front and the back of this, those kind of smart information as and when the action happens, it can also be done, and that's a big help, right? So the journey is kind of eased in such a way that there is just no need for I mean, you finish everything and then you come back and see that at the end of it there is a problem. That's not how. With AI, one of the best things that's going to happen is, first of all, it's going to be quick. You'll have these smarter ways of doing things, and then and there you get information. Okay, so I think that's where the friction typically gets reduced. Now, the other area that I think where there has been a little more support. In fact, many people take this approach. Is also you actually profile a customer based on certain, understanding of how the customer is, and actually get only documents that are relevant for that type of customers. You may not really want to get everything from everyone, kind of amount, right? A more personalized approach to document acceptance from them. Okay, so that can also be driven through AI, and of course, there is a complete log which actually ensures all the compliance standards are upfront built into the flow. So, which actually means that it becomes an accelerator rather than just a support. That's how I see this as. Okay. So, I think these are typically some of the areas where AI I see helping remove the friction.
Thank you for that, Vidya. Girinath, if it's okay with you, I'll extend the same question to you as well. If you would like, I can repeat it for you. But the question essentially is, where can AI realistically help us reduce document-related friction, such as incorrect submissions, re-requests, while keeping the regulator-related compliance discipline in check?
Yeah, I would also probably take the similar route to what Vidya said. AI can never be seen as an compliance disruptor, or AI cannot be seen as an something substitute or surpassing compliance or regulatory requirements. AI can always be, or only can be, a compliance accelerator. Very well said. I would also agree to that point, and probably Krishna would also definitely agree to that point. And at an industry level, that is something that people will agree. Having said this, I can say that realistically, whenever it comes to document related friction, you can put down into kind of, I can say, into 3 points. One, probably if the system that we are building, or the tech piece or the tech stack that we are kind of building it, if we are able to use AI to auto classify, to come see the completeness of the document, and to see if, say for example, if the Aadhaar card is uploaded, or probably the Aadhaar card is scanned, if it is completely scanned, is that front and back being done, or any kind of mismatches, or probably if the photo is a non-recognizable photo, or the scanning is not done properly. But this kind of a first layer of validation, or kind of a verification done by AI, can help you in reducing friction. Second point is, if while we are processing, or while we are building the tech stack, if we are able to build it in such a way that we do not repeat the request of documents, or if we do not have a lot of re-request logics that we are building in, then the customer's journey looks more frictionless. And as we said a bit earlier, AI is a complaints enabler or accelerator. If our tech systems are also built in a way to accommodate having audit level documentation, then that would be helpful.
Understood, Girinath. Once again, very well articulated. Thank you so much for that. Krishna Swami ji, I'd like to extend the next question to you, if that's okay. So this particular question is, as lenders plan for growth this year, how can day zero be treated as a strategic asset? Any observations on what can be done differently as opposed to what's currently being done?
Okay. Yeah. Every lender, I think, today is looking for a 25 to 30% growth year on year. Okay. That is a very normal thing. And there is a huge amount of pressure on everyone, basically. So the growth comes from multiple ways, actually. So it comes from increase in average ticket size. A 10% of some percentage of growth comes from that. Some percentage of growth comes from new branches or the new locations, which the organization grow, basically. And most of the remaining percentage of growth has to come from the efficiency of the systems which are being used and how they are being used in the system. So from the lead, again, the lead procurement. Today, I think most of the organizations, NBFCs, banks, they have multiple channels of lead procurement of leads, cross-selling products. They have their own. Most of the companies also have their own customer apps for where the existing customer can request for a top-up loan or can request for a new product loan or something like that. How quickly a system can be built or a system is devised in such a way where a business rule engine says, okay, existing customer, what are the criteria for him to go? Does a credit evaluation needs to be done again, or it need not be done, or a direct approval based on these norms and based on these business rules with along with the weightages given to it can be done on that. From a day zero perspective, if you see from the procurement perspective again, so a lot of customers, if you see most of these banks, I am from Aptus Valley Housing, we are in tier 2, tier 3 and tier 4 towns actually. When the customer referrals come, actually the referrals are mostly from the same social strata or from the same ecosystem. Actually. Most likely those leads will go through basically. Yeah, and it will be the right fitment for the organization. How quickly they can be processed, that has to be looked into basically. So that is a very important psych actually, where a lot of people neglect that. But that is if you're having some 1 lakh customers, so even some 10% will give you a 10% growth in that for the organization basically. So that's how it should be looked into the growth. The growth has to be split into multiple ways on how it can be accounted for and how growth can come from each channel and how each percentage is valuable for the final growth of the company. So in this, the whole premise is basically there is a lot of leads actually which come or do not come to the organizations this thing from the branch where that is where you need to ensure that the footfalls, whether it is physical, whether it is digital, all are accounted for and all are brought into the system and a probable status is maintained. Along even for the rejected lead, it can go back and come back. Probably after 3 months, he can become a customer to you. So this, how you manage that early, that is the pool actually. Pool of the customers are the uh, probable customers. Okay, probable customers. How you filter them? How you make it? From a cold this thing to a warm lead, and then to a login and a potential customer actually to the potential customer stage. And how much of transparency is designed in the system for all this actually. That is very important and how we can ensure that the respective channels also can be paid and all that stuff. This also it includes the whole thing actually. The referrals come with incentives and how the incentives are managed, how transparent are those incentives which are being paid and all this thing. If that is taken care, I think probably growth can be achieved.
Understood, Krishna ji. I think I have to say again, once again, very well articulated. If personally I have to call out what particularly stood out to me was number one being is ensuring that even leads that are not approved in today's day and age are accurately tracked and reached out to after a predefined period of time, so you're able to derive maximum value from that.
Yes.
And number two thing that you stated that stands out honestly is that as opposed to a typical lead generation activity, the leads that do come in as referrals from your existing customer base, the quality of those leads are much better, and in turn,
Yes.
the possibility for conversion for those leads are also much better. Right?
Yes.
Thank you so much for that
Thank you.
background, Krishna ji. So moving forward, Ms. Vidya, I'd like to ask you something if that's okay. So from in your personal experience, from what you've seen across the industry so far, how have prospect expectations in the very early stages of the loan journey evolved over the last few years?
Actually, I think, maybe if I have to put it in a single sentence, people expect the loan journey also to be very similar to the kind of digital journeys that they get everywhere, right? The
Absolutely.
serve
Like an
food in
instant
few minutes
application.
and serve everything in few minutes, kind of a, yeah, instant gratification kind of a, that's
Absolutely.
almost an expectation, isn't it? But however, I think important thing that we should look at, because see, for the NBFC, right, for all of us, the first impression and the second, is very, very important, so that we also get the customer to stick to us. Okay, I mean, that's the key. Retention of the customer and ability to get the customer is what is very, very important. And so the first impression makes a big difference to us. So I think the very first thing is the speed with which we will be able to get back, right? Speed is something that they will want to see in terms of how when a onboarding happens. Okay, so that's very important, where some of those things that I spoke about from an AI perspective will also be relevant in this, is where you're able to, I mean, that with just one, biometric condition, you will be able to pull all data from Aadhaar and you're instantly onboarded, right? Those kind of experiences give a much better feel to the customer. So that's something that is, I think speed is, of course, one of the top points, I would say. The other one that I also see is in terms of onboarding them, right? KYC information and things like that. The next one is also an eligibility check. See, why is the customer coming to us? Because they are, they need loan and they don't want to go through a big process before they find out that maybe they are not eligible or something else is required. So early eligibility checks and the ability of the NBFC to tell them that these are the kind of conditions, being able to transparently lay out what are those conditions, etc., will also be very, very important for them. Okay, I think that's one. And as part of this, I also see, for example, there are pre-approved loans that can be given, digital loans that can be offered. Those things actually matter to the customers wherever it can. Of course, the larger ticket, big ones where you need to go through a significant underwriting is another one, but I'm sure the customer also understands that part of it. Wherever the loans can be instantaneous, there are pre-approved offers, people do want to take those, right? So I think that's the way to go for the NBFC, and that's an expectation from the customer, is what I mean, from the prospects. That's another thing, because it's almost a straight through journey for them the minute they say yes, and some of those things happen. So that's another important one I feel in this. The other aspect again is a more personalized service. Again, that's an expectation, again, with every journey that we undertake. It is not just in a loan journey. Okay, I think, and that's an expectation again from the customer, and these have evolved in the last few years because the possibilities have become big with the kind of technology improvements and things like that. Okay, so I think it almost, instead of this becoming a differentiating factor for NBFCs, it is slowly becoming a necessity for NBFCs, right? So that's what's happening. And with all
Absolutely.
of this, I also think that the customers are right now looking at data security, the privacy aspects, and in some of our, I mean, if you really look at some of the customers that we work with in Tier 5, Tier 6 kind of cases, we have to educate the customers because that's also a regulatory requirement for us, right? I mean, it's a compliance need. So it's important that we tell them, but at the same time, bring in that as part of, so that has become an expectation from the customer. If I don't know you, please at least make me aware of it, right? And the regulator says, ensure that your customer is completely aware. So that's another thing I'm saying, security, privacy, and the transparency of what is being told by the lender to the customer is becoming very important. I think these are a few factors that I would say itself is very, very are the kind of evolved expectations, at least. Yeah.
Understood. No, Vidya ma'am, I think very well articulated. I have to agree with all of those points. If I have to quickly summarize, quite honestly, as a society, we are moving towards immediate gratification, as you called it, a 2-minute delivery, a 10-minute grocery delivery. So and we've come to a stage now where it is an expectation and not a feature. As a loan user, as a loan applicant, I expect for the eligibility to happen within a few seconds. I expect for the NBFC to carry out all of my eKYC, my PAN verifications, all of that digitally. Even if I'm not eligible at this point, I expect that answer to be given out to me, as Girinath called out previously as well, that based on your profile at this current time, you are not eligible. These are the actions that you need to be carried out. You need to carry out to be eligible in the near future. Right? Girinath, I can see you nodding. Anything you would like to add to this as well?
I would agree with that, Utsav. I think
Okay,
fair point.
perfect. So with that, Girinath, I'll raise my next question to you then. Uh, so when senior leaders review early funnel performance, what type of insights tend to be the most useful for improving customer outcomes downstream?
Okay. So Utsav, from I can say from our own example or our own experience, when we
Please.
launched Digimani Finance Insta Personal Loan app in the Play Store, so we were more delighted and more inquisitive towards what was not working or what was stalling, and
Okay.
not on what was actually working. Because on at the early stage, probably even in the first 3 months of your go live or going live, what happens is that you really know something is working, which cannot be your top one priority, because what is not working is the one that actually accelerates your cost, that only accelerates your resource utilization, and that only actually brings down the customer experience. Now, in terms of talking about what is not working and what is stalling, I can put this into two things. From our perspective, whenever we saw some kind of a pool of customers are not completing the flow, or not going through the flow, not by design but by a reason which is not designed or planned according to us. Say, for example, if a customer doesn't complete the flow because his credit score is less than the defined threshold, it's fine. If the customer doesn't complete the flow because he is self-employed, and we are only catering to salaried people, which is again fine. But if a salaried personnel with a good credit score, if he is not completing for various reasons, it could be a reason that he is unable to access his bank statement, or it could be a reason that the name mismatch between PAN and another KYC is there is a mistake, or there is some kind of a delay in getting a API response, but you have designed it in a way whereby the flow gets stuck because there is some kind of a latency that you have made for person to complete that flow is 2 minutes, and the API response gets received after 3 minutes. So these kind of root cause analysis for all those customers that are getting stuck is something any top leader or any management would like to know, as a matter of first hand information whenever they are going live. On the second point, someone getting stalled, which we usually term it as a latency issue. Someone
Right.
who's supposed to complete a journey at a probable X time takes 2x time or 3x time. So, what is actually the impact? It could be a server issue, or it could be a server issue at your vendor end. So, again, doing a root cause analysis and coming out with result would actually help you in reducing the dropouts, would also help you in reducing the delay points. And if there is any rework, again the rework would also require a lot of efforts from manual efforts from your team. So everything can be reduced, and the path can be made into a greener path.
Understood. So if I have to quickly reiterate that, essentially the point that you were making was there are multiple reasons why any particular prospect might or might not complete a particular application. There will be instances where the application is not completed because that particular prospect, either he's ineligible or his credit score is not right, or like you said, some sort of technical
Those
challenges
are
where
just
there is a mismatch.
examples, Utsav. Those are just examples, giving some examples.
Okay, understood. So, but the main priority here would be to ensure that the users who are eligible should not be stalled on account of a technical gap, essentially, right? And so whether somewhere where the
Any
journey is
gap,
broken.
if the root cause analysis is done well, and whatever is your key takeaway, if you are able to build that back in your next phase or in your next iteration that is going live, will help you in the flow.
Understood. So, Girinath, a very obvious follow-up question to this would also be, so borrowers today often apply to multiple lenders, right? So, what are those few things that would help the borrower feel that this is the NBFC or this is the lender who I'm having a good experience with and who I feel essentially easier to work with for the within the first few interactions, essentially?
Okay. I'm sure Vidya and Krishna would also say this. There is no straight answer to this question because every borrower thinks differently. Every clan and group of people think differently. But if I have to tell you in a kind of a 30 seconds kind of an answer, probably having clear communication, fewer documents requirements, and being very predictable and clear at the beginning would help the customer to make them feel that probably yes, this is a genuine NBFC who is trying to help me in this situation and not trying to get fetch as much data as possible and trying to reroute. So probably clearer communication and fewer document, probably a bit of a human touch. I think these are some of the things that comes to my mind. I'm not too sure if everyone would see this, but people think differently.
Understood. Krishna ji, if it's okay, I'd like to extend the same question to you first and then to Vidya ma'am as well. What, in your
Yeah.
opinion, puts a lender or a partner like yourself aside in the mind of the customer within the first few interactions?
See, actually, okay. So I will answer in two parts actually to the earlier question and this. Basically, see, when we see dropouts, that's an alarming sign, basically. So first, what we need to segregate is organic sourcing and inorganic sourcing. What is the rate at which the dropouts happening at each stage, basically, whether it is lead to login or login to sanction and sanction to disbursement. And then you understand what is the root cause of this, basically. It can be associated with a location, it can be associated with a particular behavior, it can be associated with a branch, or it can be associated in the system inefficiency, or in, as Girinath was telling, actually, it can be even handholding the customers. Okay. So that is where the customers drop off. Even with multiple vendors, when as an applicant, basically, the confidence which the NBFC gives decides actually whether the customer is going to be with you or is looking for the other vendors, basically. Because the comfort comes into very comfort and trust comes in a huge plays a huge part here, because he's going to part with his land document, or he's going to part with something secure, say some security he's going to give you, or that. So a huge part of this game comes with the trust, actually. If the customer can trust you, your processes, and if he feels that okay, these guys are transparent enough for me to go ahead with this, because this decision generally is not made by a single person. Most of the in tier 2, tier 3, it is made as a family decision, actually. They discuss within the family before going also. It happens, actually. Even we do that, actually. We discuss. I think most of us in our lives probably would have discussed with our friends, family, well-wishers, or whatever. So this is so the trust is very important. The speed is very important. Transparency is very important. What are the processes? What you need, and what is the whatever the lending rates or whatever the terms and conditions are explained clearly. Then he feels confident. He feels comfortable. Okay, this guy is okay, and then that's what starts the interaction. That's where the customer journey starts. Otherwise, the customer journey is not going to start. Yeah.
Vidya ma'am, any thoughts around this?
No, so
Anything you'd
other
like
than,
to
of course, the harder aspects in terms of, the journey to be better for them with no friction and things like that, in the softer aspects, like what, Krishna mentioned, are the real ones, right? At least for the kind of customers that we work with, where there is a personal touch when we onboard and all that, trust makes a big difference, okay? Along with it, a more seamless journey through the system just makes it that much more comfortable for people to onboard. I think very, very important. I think software aspect is something that is very critical,
Yeah.
at least in the kind of areas that we work on. Yeah.
Yeah, perfect. So Vidya, my next question would be to you in that case. So in your opinion, how can technology help DSAs act as a true extension of the lender while sourcing rather than a disconnected touch point in the user's journey? So I think all of us have very elaborate DSA channels that we source leads from, that we work closely with. So we just wanted to understand how that plays into the whole experience that the customers have.
Yeah. So with the kind of technology improvements that has happened, I think, see, there are multiple options, but the important thing is that the distance between the customer to the DSA to the lender is expected to be really shortened, right? And that's the so they, or rather, the customer should not feel it is actually a DSA, right? And one of the things that everybody works on is an omni-channel kind of an experience, irrespective of what the channel is, right? For
Absolutely.
the customer, the experience needs to be similar. At least that's what the NBFCs work towards. Okay, and I think the way I see this working is one, some of these DSAs can directly log in into, use the apps of the lender and directly log in cases, in which case, the act is minimized. And with the kind of integrations that are possible, API based integrations and are possible that are there, the DSA apps in turn can integrate to the lender app, so that right at the time of onboarding, all the messages are given, so that the same thing, they don't have to wait for some kind of a response to come back to them. I think that's also becoming critical, and technology will, is helping this. Either could be a direct use or could be through an integrated kind of a, could be a unified data platform or a app which is integrated. That kind of a model is typically what supports. Of course, like I said, it also the within the lender, the design has to be done in such a way that irrespective of the channel, customer goes to the website of the lender, they should be able to see all of this information. Okay, for example, or any other channel, they should be able to see the same kind of information. So that integration also becomes important. I think, for example, we have gone through an omni-channel journey in terms of transforming our systems to be integrated with each other, so that we can give this kind of a experience as well, right? The other thing that I also see is to keep a very, with respect to DSA specifically, a close monitoring ability, the visibility, whatever that we spoke of in terms of leads and all that, the visibility for the DSA is also there with, feedback. Then actually the loop closes and you're actually able to give that kind of an experience to the customer. Okay, so I think, and with dashboards, with reports, whatever that is there, the feedback loop closes. You're able to see that. I think these are a couple of critical areas that I see through which we can actually reduce the distances, how I see it as, and give the customer the feel that it's all one and the same.
So, Vidya, just a follow-up question on this. Would you also say that actively carrying out sort of, I think, oversight of the DSAs is something that you did mention. Does training the DSAs from the lender standpoint also come into the picture? Would you think something like that would also help on how the DSAs should actively engage the end user? What is the verbiage that they should use? How should they respond to the queries?
Yeah,
All of that.
some of those will have to be, I think, pushing the change across to the end person, irrespective of whether these are the branch employees who are sourcing or the DSAs who are sourcing, is very critical. Okay, end of the day, they are the touch points, right, to the customer, and it's important that they have that kind of a, so yes, learning, training them with whatever it is, pushing micro content to them so that they are kind of aware of what is going on. I am sure, I know we are not moved to that kind of a scale, but if you really look at something like an Uber or Ola, when apps update comes, you don't really, I mean, there are ways people intuitively understand and are able to take this forward, right? So that's the level to which scale needs to move. And I'm sure that's a vision for future, but I think that's something that we'll head to over the years. That's how I see this.
Thank you for that input, Vidya. Do have another question for you. I'll just come back to you with that. Before that, I'll raise this to Krishna ji. So Krishna ji, you did touch upon this question previously during the conversation, but I'd just like to raise this to you again. So on day zero, before the agents even log in, senior leaders like yourself, what should they be able to clearly see? I think a few points that you mentioned were the leads that have been received, leads that have been rejected by branches, leads qualified by any other channel or partner. Anything else besides these two, 3 points that stand out to you that should be visible to you as a leader on day one before the agent even logs into the system?
Yes, see, over a period of time, we understand actually from different channels what is the conversions happening and where do you get the kind of leads actually, which fits for your organization criteria, basically. Okay, right. So that has to be looked into actually. See, social media, for example, there's a huge amount of leads merging. What is the conversion rate actually? Are you shooting in the dark? Are you spending too much time and energy there, where you are not focused, whereas your customer referrals, which comes, are much more easy to convert, and where the hit rate is very high, so that has to be looked into, and those channels which are really helping the conversions, where the conversions are healthy, where the leads are healthy and converted into disbursements and into as a loan. So that has to be seen, how they can be promoted and how they can grow in size actually. Okay, so these things are very much needed. Apart from the clarity, then you will understand how the coarse grain leads can be fine grained actually. So that helps us a lot of actually where a coarse grain lead can be fine grained, and that can be taken into the login. See, the sales officer at the sales at the branch actually, okay, he has his own organic customers. Apart from this, these channels are pushed into him for his. We don't want our sales officers to waste time into unnecessary coarse grain leads actually. You are wasting your sales time. So how are you reducing your time for sales basically? So by doing due diligence before it goes to him. So what we do is we run a PAN API. This API, we see whether his PAN and Aadhaar is linked, or the PAN is there. Okay, he's eligible. What kind of product he is looking into? If I'm not doing an unsecured loan and someone, a lead comes in, he's looking for some unsecured loan, I don't need my sales to waste time on that, to go to his home, travel some 10 kilometers, go to him, talk to him, and then understand that this is not the right fit for me. So you can eliminate a lot of things which you do not need actually and give focused leads to your sales actually, whose time is very important for the organization's growth and conversion of leads into logins and thereby into sanctions basically. This is very important. Yeah.
Understood, Krishna. So Vidya ma'am, this following question would be to you in that case. So Krishna did just mention on how important it is to ensure that the leads, your particular sales teams, your channel partners, your DSAs are going out and working on, are they qualified leads or not, right? So with that, my question to you is, a lot of missed businesses sit in the rejected buckets, right? Or not pursue leads bucket, maybe because the CIBIL was not high, maybe because of mismatch in one of their documents. So, in your opinion, how are high performing sales teams supposed to isolate this and figure out which leads from these buckets are worth revisiting and which leads can be let go of and essentially might be lost in the system? Okay.
See, I think, in fact, Krishna mentioned in one of the previous conversation as well, and you had, called this out. Important thing is that um, rejected bucket or a rejected queue actually is a future pipeline. That's more or less how you should really look at this, right? And there are ways and means to look at this. So I would like to answer this in two parts. One is, of course, how do you handle the rejected bucket and ensure you identify the worthwhile cases on this, or the cases that you can take this on. And the second part, where how do you ensure you don't lose out on, so the point here is, if you really, I'm sure many of the organizations use this, there is a reason code typically put when you reject. You need to know why it got rejected. And you do analysis, you will realize that some of them are temporary rejects, right? In terms of, it could be because they still have, currently they are not qualifying because some loan is running, but it could be in the end stage they may actually say that now I close the loan, can you now give me, as an example,
Right.
right? Or some of them could be permanent reasons for a rejection, like a write-off or something like that. The real, the important thing is to analyze the reason codes and then pull out the ones which can be considered. There could be, cases that could have got rejected as borderline cases, scores. You may want to look at alternate data and bring them in. So typically, the very, very important thing is to have a lot more deeper look, and you can actually use AI for some of this as well, right? Analyze, get enough data in, analyze this data to be able to really look at which are the ones which you can pull back and take it, because some of them could be time bound kind of rejects. It may not be really a real reject. At that point in time, you're not really, you can't be given. So I think these are some of the analysis that is possible and can be done, because for example, you're also supposed to tell the customer at least at a very high level that your loan is rejected, right? And you will have to, ideally, you can actually take it up. In fact, I keep saying this, you don't have to tell them that your loan is rejected. You should be able to tell them that your loan is rejected for now, okay? Because I mean, you can actually make it into a more friendly kind of a, I mean, you're saying no, but the no can be, tuned to the extent as to that they can always come back to this. Okay, that's
Of
how
course.
we looked at. So I think that kind of looks at, how we can cull out the worthwhile ones out of it. But there is also an aspect of how do you not lose sight of this? And I think that becomes an important one by actually pinning ownership on some of these. Okay, if you don't, or typically a rejected cases, for a business it's rejected, they don't want to go look at it, right? Someone needs to own this and pull out data, look at this, and then take this forward. So ownership will have to be pinned. And if it is not done, I mean, I've seen times when that keeps sitting and nobody looks at those. So you'll have to have someone in with the ownership for being able to pull out and check what can be done about this. So that becomes very, very important. And as part of this, and I know this was brought up by Krishna as part of the lead journey, integrated systems help. Lead to conversion takes time. Okay, and integrated journeys give a better insight into it, and that is something that I think also helps in getting a better understanding and then being able to not lose this. Of course, a much more friendly communication to the customer will always keep the small item open to the customer. You don't have to push them off. You can say that, yeah, there is a window, you may at another point in time, will be able to get a loan from us, kind of a thing. I think some of these are the ways I see that we can actually, teams normally are able to handle this quite well.
Understood. No, Vidya, I have to agree with that. There definitely is a big, sizable group of applicants or prospects who might have missed a singular, say, for example, a home loan EMI payment during the COVID days, maybe because he lost his job. That has been 4, 5 years since that particular thing has happened to them. Now their credit score is on track, their salary is credit on a monthly basis. But for several of the partners, they still might be lying in the non-serviceable bucket, right? So that is a very key piece. Uh, with that, I'll take a quick pause here. Girinath, I'd just like to quickly hear from you as well if you have any inputs on that.
No,
Uh,
just adding one more point to what Vidya said is that yes, and
please.
agreeing to you that the rejected list is the place where there's a scope for revenue optimization, and is actually the place where revenue loss actually happens. Adding one point to what Vidya had actually mentioned is that once you are defining the reasons because of whatever all the reasons because of which the leads gets rejected or stalled, stratifying them or putting them into buckets. And if those buckets can be taken back to your credit policy team, making reasoning out, deliberating and discussing if these can be changed at a policy level, whereby not just for these leads but for the future leads as well, if they are genuine cases and if there are genuine mitigates that are available for the reasons for rejections, then that can help in making a much more higher turnaround, or the throughput could also be increased.
Understood. Okay, so with that team, I would have personally liked to ask each of you a few more questions. But in the interest of time, I'll take a quick pause here. I'll hand over the call to Ashna. I believe we do have a couple of questions from the attendees as well. So Ashna, over to you, and maybe the panel can help us answer a few of those.
Yes, we have received a couple of questions from the audience. I'll take them one by one. The first question is, how can we scale the DSA network for loan processing in a highly competitive market dominated by large players? What key changes are needed to drive better acquisition and create a seamless process? Girinath sir, would you like to
Yeah, so
take a time?
I think
Yeah.
this was also covered in one of the questions. In addition to that, probably yeah, transparency could be one of the key, because today DSAs are still not included as one team. It is more we are keeping DSAs as for your information kind of principled approach. If that can be removed, and if DSAs are given more transparency in terms of what is the status of the files, what is the status of their logins, we don't have to expose our internal systems to them, but making the dashboards much more transparent and much more making them understand the flow or the status of their leads, that would be helpful in garnering more DSAs.
Actually, see, I have a point, Ajay, here. Actually, see, the thing is that the DSS, if you want to get them into the business or any say sales partners or associates you want to bring in, the important thing is that some responsibility has to be with the branch. There has to be a focused approach on how you acquire this DSS and what are the terms and conditions. Well, it has to be very proactive. It has to be a proactive this thing. And second thing is, apart from that, as Giri said, actually, the status actually. Today we send in WhatsApp actually. The moment a DSA is sending his login happens, immediately he gets a message that his file has been logged in. Whether it has gone so his lead has logged in now. Now the sanction, as it has been sanctioned, it is ready for disbursement. So he gets a very clear things. And this includes the full life cycle actually when you pay out his incentives also. That house also has to be integrated within the systems, and payout has to happen actually at some point, like on sanction, you want to do a payout actually. So it has to be seen that also has to be that also has to be measured. At the end of the day, a DSA or a sales associate or someone who is referring you, we have some ecosystem partners, we have so many things actually. All this, there has to be some purpose for it, and that purpose has to be fulfilled, and that has to be served actually, and that also has to be taken care of, and it has to be in a measured way.
Sure. Thank you so much. We'll move on to the next question. What are the reasons behind the industry's continued reliance on cost-heavy external sourcing channels like DSAs, and how can we balance this with investment in scalable, customer-facing digital solutions that are more efficient and cost-effective?
Whom you want to
Ma'am, would
answer?
you like to?
Yeah.
Yeah.
Sorry, Ashna, I kind of lost you for a couple of seconds.
Sure, I'll repeat the question. What are the reasons behind the industry's continued reliance on cost-heavy external sourcing channels like DSAs, and how can we balance this with investment in scalable customer-facing digital solutions that are more efficient and cost-effective?
Yeah, I think as part of the SAVAN, I was also talking about how typically they expect, NBFCs need to kind of invest in an omni-channel kind of a, setup for in the organization, right? The channels could be different. There could be different types of, you could have apps, but the backbone should ideally remain the same, and there should be some level of connect across this. Okay, and that I think is an investment for every NBFC to make. And if it is done, you can rely on those. You don't really have to rely on a DSA, right? And even for a DSA, if, for example, assume you do have a channel, a unified platform that can be open only to the DSA or some of the different types of channels that you have, where the information flows automatically, then it actually becomes a big advantage for the NBFC. So the investment has to happen there, and it's not a very typically a simple system. If for larger NBFCs, it's almost a large rollout. Even in fact, even for us, when we took on this journey, it took us months to get to a certain level of stability around this. So I think, but that's a very important investment, and I think that's the one which will make the cut for a NBFC. At least that's my view on it.
Adding to that, Asha, actually, just a small point I want to make. The question someone has asked actually why the DSA cost is it's a very appropriate question to the industry. Why? Because the cost of DSA, the turnover of files actually happens after 2 years or 3 years. When DSA pull your file away from or the customer away from you and move on to a new customer, basically. So the DSA acquisition has to be very. That's why I said some amount of responsibility and accountability has to be there in the branches, and it has to be a proactive relationship with that. Sales. That's the reason I use associates. Associate is someone who is with you with the organization, rather than just being a DSA catering to some 10 companies. That increases the cost. Actually, it is more of a rolling stone gathers no mass. That's how it happens. So we have to be careful, and that's a very fantastic question. Actually, I think that's a very practical question which is being asked.
Just adding my views on this question, probably we cannot see DSAs or the sales channels as two independent or two different ones. These are all different strategies that the companies or the organizations are bringing out. So no one would like to pay out to a DSA at a kind of a commission basis. And having Krishna also mentioning that point that the turnover of the files is going to be somewhere. We all know that if there are 10 files that comes from DSA, it's going to be 8 to 9 files. It's going to get churned out in probably 3 years or 4 years or 2 years or whatever the time that is going to take. But having said that, from a strategy perspective, I think most of the organizations, the way they use DSAs is, or their approach or the thought process towards DSAs is that wherever they do not have a solid field strength, or they do not have a solid sales force in a particular geography, they start to try to penetrate that market through one or two channel members, one or two employees, and then with a lot of DSAs, they try to settle down in the market, and pros probably settling down. And if they are confident that they have a good team size, that is where they slowly start to discourage the DSA network. I think you are on mute, Ashma.
Sorry. Yes. Thank you so much. Thank you for taking out time and joining the session. I'm 100% sure the audience found your inputs extremely valuable. Thank you so much to our audience for taking out time and joining the session. I hope we answered all your questions. Please keep following Lead Squared for more such insightful sessions in the future. Thank you so much, everyone.
Thank you everyone on call. It was a
Thank
pleasure
you.
speaking with all of you.
Thank you, everyone. Thank you.
Thank you, sir. Have a nice day.